When you start to try and differentiate who is an investor and who's a would-be investor, it's not crystal clear. You just have to ask, have you made meaningful investments in the market of a certain amount in the past so many years? So they self-declare. The true investors are half the time wanting to go direct into an investment. These are the guys coming in, the women coming in, doing direct equity, investing in a business. But for the would-be investor, they come in and they're also not as aggressive as the actual investor would be. But when you get down to co-investment, pooling your money with another diaspora or putting it into some kind of a fund, it starts to change. The formal investor comes lower, but the would-be investor starts to come up to 35%, would rather pool money. And then it starts to support as you go down the road, like if you had a mutual fund, a non-investor would be more interested in a mutual fund than the investor, and then buying publicly available shares also a little bit higher. But this tells you that the non-investor is a little risk averse. Where are our products for that investor? What are we offering? We don't have them. That's part of the problem. Pooled money we do, but not necessarily the formal instrument. So, obstacles to investment. Unsurprisingly, political instability and security, lack of contract enforcement, and corruption are the highest. Not surprising. But then we start to get into things that could be addressed, like an inadequate banking system, finding reliable information, inadequate funds for investment, and so on. You can go into more detail in the report itself. I'm going to go quickly because we have a panel to discuss these things. But when we get to the recommendations, we'll pull some of this back up. So, the report concludes in 9 recommendations. They were organized in 3 areas: local capacity building, data and information sharing, financial products and assurances. Okay? So let me take you through them one by one. First of all, the first recommendation is strengthen the capacity of local actors to provide demand-driven BDS services. This is no surprise to those that are small business operators or owners here. A lot of times we don't have the quality BDS support. And business development service support can really range from specific technical support to more general accounting support to other things. But what you look at here, when the question was asked, factors influencing Somali-based investment decisions, the question was, please indicate how much the following factors matter or would potentially matter in your decision to invest in a business. Look at the first 4. A well-developed business plan. That's hard to see, I know. But it's a well-developed business plan. Evidence investment is profitable. Presence of a transparent and enforceable contract, and projected growth potential. Those are all 4 things that we can control. We can you can put together a well-developed business plan. That's part of what we address at Shuraako. It's what many of the donor programs and other programs are doing, is addressing that. It's helping move from traditional/informal to more conventional/formal businesses. Evidence investment's profitable. Well, many of these businesses we're investing in don't have historical financials, operating statements, but you can recreate their statements. And oftentimes the business know that they have cash coming in, but they don't even know if they're profitable, which is one of the things we've learned at Shuraako is after working with a business for so many quarters, they start to realize, wait a minute, I should be doing this different and actually creating equity where they hadn't before. The number 2 recommendation is support development of effective chambers of commerce and business associations. When the question is asked, you'd like to invest $25,000 into a Somali industry you're not familiar with, who are you most likely to trust for your investment recommendation? Unsurprisingly, diaspora say, well, first is business partners. The second to that is family and friends. I hate to break it to you, family and friends aren't always your best business partners. They could be, and they may be good business people. That could be true. But they aren't always the best business partners. But they do it because they know them and they trust them. So the question is, if they are getting their information, their feedback from family and friends, why aren't they getting it from more formal sources? We look clear over here. The Chamber of Commerce is clear down here. The diaspora subset, only 3% are going to the Chamber of Commerce or associations. Locally, it's a little higher, where local belief in the chambers, of course, because if you're here and you're local, you know what the chamber can do for you. But this tells you they don't respect or appreciate or understand or get from the local associations what they could. This represents an opportunity because we could be capacity building the chambers, the associations, to understand their sector and present that information better to diaspora in particular. I was with, from the south, the Mogadishu Chamber was in Minnesota, Minneapolis not long ago, and I went with them to present to the Minneapolis business community. And we do that often. Shuraako has often gone abroad, and we're willing to go abroad into any of these countries where diaspora exists and show them our evidence of what's going on, because we're hoping to change the narrative and help direct things to safer investments. The number 3 recommendation is encourage formal data collection and market research in partnership with local chambers and ministries. Now, this has been called out earlier today. We say that we don't have the data. We don't have the market research. Well, I'm not sure I think we have more data and market research than we think. We just don't necessarily have it formalized and accessible. But when we do conduct the market research, we need to make it available. And this is the reason why. The question is, indicate how serious of an obstacle these factors have been in your real or potential investment decision. How big of an obstacle is it? Political instability, security, lack of contract, corruption. So we can't control those. The inadequate banking system, we don't really control that, but we definitely control this. Finding reliable information about investment opportunities in Somalia. We can control that. We can make that available. So we urge donors, when they're working with the ministries, to work all the way through to make sure the information, and then when the ministries are pulling data, to organize that in a way that's accessible. I mean, it's what they were talking about this morning. It's the intent of the National Development Plan, too, to go down that road, create a roadmap, a path. A lot of it's going to be market research data. And it makes sense. A lot of times when we're in diaspora groups, and they always have really good ideas, but they don't necessarily appreciate the restraints, or they don't have good data on how to execute it. And I think sometimes, wow, hold your money, go there, live for a little while, kind of, get your feet wet before you put your money out. But if they have better data, it would facilitate more investment. Okay, so this is one of the things. The recommendation number 4 is encourage information sharing through diaspora investor networks and meetup groups that are built around investors' profiles. The point of this is diaspora organize. We all know they organize. Are they organizing around a coherent, clear message? Not always, but we could help that. So the question here is on preferred upfront assurances. I'm sorry that's so small. You can see it in the book. The survey question is, you're exploring different investment opportunities. What would you most prefer as an upfront assurance, i.e., something you can do prior to an investment to gain against the loss of your investment? Can you focus down a little bit? So if you're looking for upfront assurances, what's going to induce me to go in? The first thing is co-investing with a successful Somali diaspora investor. Just put me with somebody who's done it. No brainer. Of course you'll do that. If I know somebody that's there, that's doing it and getting along well, I'll pool my money. So connect me. And then there are other ways. So one of the things we're advocating for is, in the diaspora, we need to encourage this kind of formalizing. We're not saying investor clubs, because you have to be conscious of securities requirements in wherever their host country is. But that would be very beneficial. And of course, diaspora already do organize. Some of them are already doing this. Oops. Oh, yeah. The next one is partnering with Somali financial institutions to champion savings to investment campaigns. Earlier today, we were talking about the need. The banks are saying we need to get locals to start to save, and that's true. It's true for two reasons. They need to save so they have reserves, but they also need to save because if they do save, it creates liquidity in the market for the banks, which is a benefit. Among respondents, 4-to-1 were remitters. Now, savings to investment campaigns have worked in other contexts where you start to create a savings account. You can leverage that. You can get creative programs, donor matching, potentially bank matching, better rates. But if I have a deposit account, I can go in and take a small loan against it. That's one of the ways to spur on greater investment. Plus, financial literacy and investment literacy, both business financial literacy and personal financial literacy, is in great need here. When it was talked about earlier on the panel that it would be of benefit for the plan to do educational programs around financial literacy as well as the banks, I think that's true. Because a lot of what we discover is small businesses coming to us that have been informal are doing their best because they're natural business people. They're very on top of what they do. But that doesn't mean they really understand what's happening with the accounting, economics. They don't understand how to leverage. They don't understand how to use credit. It's not their fault. They're still doing the right thing by managing their business well to the extent that they know it, but they could do that much better. And there's only 3 more, so we'll go on to the panel in a second. The next one, number 6, is support credit products that leverage locked up real estate value. In other words, a hybrid mortgage product. The second, 56.5% of the diaspora that responded own a home here. It's the second most popular investment in the country. How many of you paid cash for your home? Everybody pays cash for the home because there's no credit for it, very little. It's all cash. It's all sitting there. Now, there are reasons why. It's because of the lack of clear title. It could be because valuations aren't clear. Many banks are beginning to take or do take real estate as collateral, but it's still too arbitrary. Earlier today there was a recommendation to create land registries, that sort of thing, and that would go a long way because if in fact you were to open up access to all the locked up capital that exists right now, that's an instant infusion of cash. Instant. Just because you legitimize this system. And it's happened in other economies. It happened in Mexico, it happened in China, whenever they got serious, and it's happened in other contexts where they get serious about land rights, titling, and all that. You unlock a ton of potential, a ton of actual capital. Why couldn't you take 20% of the value of your property you own out in a loan and start a business? You should be able to. And the banks, when they're on the panel, can say, we do that. And if they do, I'll say, good, do more of it. But that's where we should be going, is unlocking that. And it's good for the banks, too. Shuraako, when we underwrite some kind of a loan, but Shuraako doesn't lend the money itself. The lender lends. Shuraako just brokers it. But we always say you need to have collateral of some sort, and oftentimes we take property as collateral. But we know that it could be difficult if there ever was a foreclosure to actually foreclose. We take that risk. Okay, number 7, provide tangible assurances to diaspora investors such as credit guarantee schemes. So when you ask a diaspora investor, there's 3 respondents here. Yes, the question is, the following are ways to reduce investment risk. When considering Somalia-based investment, how well do you believe these strategies work? How do you offset risk? So the dark blue is yes, would reduce significantly. The next one is it would somewhat, not at all, and not something I am familiar with. So the first one is a matching grant. Well, 44% said yeah, it would make a difference. 28% said somewhat. 18% said not at all. And 10% said I don't know what it is. But here's the great thing. A loan guarantee from an international institution, almost exactly the same. 42% said it would make a difference. 24% it would probably make a difference. 22% said no, it wouldn't. And 13% I don't understand what it is. But here's the beauty of that. A loan guarantee can be leveraged multiple times. It's just a guarantee. It's a cosigner. A matching grant is a once and done deal. I put up a $10 million fund, I match grant out, it's into the market once and it's gone. If I do loan guarantees and use that $10 million, I can do multiples of that. Probably 4 to 5, 6 times that amount. And it revolves. And if you structure a loan guarantee well, they can actually be revenue producing. And what this does for the banks or the investors is it shares risk. So it's legitimate that businesses complain about the rates because they're high. It's legitimate that businesses have issues with the barrier to get capital because they're high. And the reason it's high is because that can exist here still. And it'll start to break down as you start to risk share and as you start to do things like this where there's guarantees and or combined funds. That's one of the reasons we're doing the impact fund, is to start to break that down, because then you can possibly do credit guarantees for, say, women in business or enterprises that employ youth or a specific sector like agriculture or whatever. So that's good news. And they even said they would appreciate a loan guarantee from a Somali bank. So they're even saying it's less, but I would still, if they guaranteed it, they gave me a guarantee. Well, that's part of what we want to do, is get the money here into the local financial institutions so it can be locally managed and deployed. Okay, number 8 is, the recommendation is develop mutual funds that offer varied risk profiles, targeting key sectors and producing a double bottom line. So the question was, you have decided to invest $25,000 in a Somali opportunity. What do you consider to be the most attractive? I pointed this out earlier. For the would-be investor, the diaspora, they say, I want to commingle my funds, or I want to buy a mutual fund. So the opportunity would be, if you create the formal mechanisms, to combine funds or create a mutual fund. We are actually in the process of looking at feasibility studies to create mutual funds, but it's got to cooperate with the legal framework. There have to be the protections. This fly is very persistent. But you can understand, if you're in the diaspora, that makes a lot of sense. If I can get to a rated fund, if I can push part of my my 401k into a mutual fund, boom, it can come here. Okay, and the last one is promote community development finance, including infrastructure bonds and risk insurance. So one of when you look at the motivations for investment, one of the motivations for investment, okay, I think there you go, thank you, is, well, 39% is social impact, but the other 61% is return-based. It's maximizing my return and making sure it is a safe investment. Well, this is where community infrastructure bonds or risk insurance could come in. Again, when you ask them, do you send money home to build a school? Yes. If they call you and they want, you're a clan elder or somebody in the community gets a hold of you and they want to build a road, yes. How do you know the money was used well? Well, we don't. We don't get a report. We don't know, but we know the road was built. So they kind of know, and the answer is, of course I'm going to send the money. But then you ask the question, what if it was a formal bond? What if you could put together some kind of a structure? Would you send to that? And I said, absolutely. Next door, in Ethiopia, where cost of energy is very, very low, they're moving toward even a bigger hydroelectric dam project, which will be funded primarily by diaspora bonds. Diaspora bonds are common in a lot of post-conflict rebuilding economies. So it's one of the areas we should go toward. But if I'm a diaspora, of course I'll put my money there. Just give me a formal instrument. Help me do it. I mean, we could be raising 50, 100, 200,000 to build public infrastructure just by raising these bonds. So now, this isn't going into depth. There's a little more information in the report. Many of these things have to be explored more deeply. They have to be vetted by policy. they have to be supported by interest, but they're common sense and they're backed by data.